Alright, this is going to be the part 2 from my last video about trends versus consolidation and how to identify the difference. Now, the market is always shifting between trending conditions and consolidating conditions. Sometimes it's tricky to tell when a trend is coming to an end and evolving into either a trading range or a bear trend. Typically, the way the cycle goes, and I will make a little Word document here. Nothing fancy. I just want to type this out so you guys can maybe jot it down in some notes or something. So the market is always evolving to different states, right? So we have trading range, then it evolves into a breakout. So when you have a trading range, obviously the price is not trending, and price needs to break out of the trading range in order for a trend to begin. So you can look at it at a breakout as the start of a new trend after you break out of a trading range. After a breakout and you get a pullback, that begins the channel phase. Now, it's tricky because when you have a breakout, right? You have consecutive, let's just use a bull breakout, for example. You have consecutive bull bars, one after the other. And the first inside bar, it could be an inside bar or it can be a bear bar. The first bar that you see that is either a bear bar or an inside bar is the end of the breakout, and it's the start of the channel phase. I'll show you what that looks like on the chart. Once you enter the channel phase, then cycles back to the trading range, and it continues, the cycle repeats. It's not always so obvious. Sometimes you have to add a little bit of nuance. However, if you look at a lower time frame, if you scale down low enough, you'll see that this cycle is always repeating. And after you get a trading range, then sometimes it's not so obvious where the market will break out after that, right? So say we have a bull breakout channel trading range. Once the market goes into a trading range again, the odds are even. It's just as much likely for the bulls to get a breakout as much as it is for the bears to get a breakout. It hardly matters if it's a trading range within a bull trend. If the trading range lasts long enough, eventually the odds begin to even out. So we'll get into the charts and explain, show you some explanations. But remember that this is going to always be the cycle that the market's always going through. In the last video, I covered what these conditions look like. Remember, we have the breakouts, which are very bullish, one-sided, channels, which are two-sided, but still have direction, and trading range, which is two-sided and sideways, right? There's no trend there. So we'll go into charts and go through this here. So here we have the micro gold futures. MGC is the ticker. Now you see here we have a trading range, right? Sideways market. There's no trend either way. While the market is in this trading range, the probability is even for a bull breakout as much as it is a bear breakout. You don't know which side it's going to break out of most of the time. Therefore, you want to bet against a breakout. The math to bet on a breakout is 50-50. It's a coin flip. So that means you need better than a 1-to-1 risk to reward. It's much better to trade the failed breakouts because the math is better, right? So let's just say we caught wind of this trading range sort of late, right? Let's say we sell the top up here. Now we see, okay, it failed to break out right here. Maybe this is a trading range. Okay, we'll go short at this bear bar. You got a 2-to-1 there. You exited at this lower third. You bought it back. You exited at the upper third, got a 2-to-1. So that's 2 trades in a row that you would have won. And then you short again up here, and you would end up losing this one, right? So you won 2, you lost 1. That's good math with 2-to-1. On this one, we get a bull breakout, right? Now, right here, we get an inside bar and a bear bar. So what qualifies as a pullback, and I'll have to make another video on pullbacks in the future. So just bear with me on this one. But all a pullback simply is when price trades below the last candle. So fine, or it's an inside bar. It could be one or the other. So here's an inside bar. So this would be the first time the market pulls back on this inside bar. Then you have another bar. This is a bear bar that traded below the previous bar, and you can consider this whole little pullback as one pullback. You don't have to say, okay, well, here's the first pullback and there's a second. This entire price little trading range is a pullback. And once the reason I say trading range, right? Because if you look at a 1 minute, let's not lose our spot here. Okay, geez, zoom back. Anyways, that little consolidation period on the 5 minute, you'll see what I mean by I guess the 1 minute doesn't go that far. Okay, bear with me, guys. I do not make edits. I'm doing the lesson as we go, so you can see that I'm adapting with the market. I'm not going back and making edits to make it look like, in hindsight, I knew what I was doing. I'm trying to keep it all live. That way, there's no ambiguous things going on, right? Like, oh, you knew that was going to happen. No, anyways. So we have our first pullback there. And that begins the channel phase once you get your first pullback. So here's our channel from the breakout to up here. It's a very, very tight channel. And you can see you got lower highs and lower lows. Here's our first lower high. Now, when price breaks through the channel line, right, that we drew here, you look at this and you say, oh, well, the market's no longer trending up, right? You can make a case that the market is no longer in this channel. Now, the first thing I assume when price breaks below the channel line is trading range. I don't automatically assume bear trend unless we get lower highs and lower lows. So let me grab another tool. So we break through the channel line there. Change this arrow. Don't like it so big. We break through the channel line there. Immediately, I'm thinking trading range right off the bat, especially after a big bull breakout. And the market did evolve into a trading range in this case. Come on, let's get a clean one. So I'm looking to measure this high from this low. And again, I would be looking to buy here at this level. As you can see, price never went to that level. It pulled back 50%. And now we're wondering, okay, is this going to be a new swing high? Are we going to put in a new high here? And as you can see, the price didn't make a swing high on the next leg up. I do not like that big old arrow. It tried to go for a swing high, a new swing high. It failed. Now I'm really beginning to see this price action as a new trading range. When I see this fail, even it could even possibly be a bear trend if we break below this low, right? But we didn't. Okay, so let me make the fix while I'm here. This line. So then I'm looking at it from this point of view. Here is our trading range, and so you could have bought the lower third here of this trading range, because once you see this level or this low, this swing low, fail to put in a new swing high, I'm automatically thinking trading range until we break below that swing low. Now I'm thinking bear trend. Until we have a new swing low, I'm thinking trading range. So when price trades the lower third, you have a very simple 2-to-1 entry there. Then we do get a bull breakout. And now this has evolved into lower highs, lower lows, a more broad trend. This is even, it's like a slight, it has a slight uptrend to it, but it even kind of looks like a trading range. And this tells you that this bull trend is not very strong. And yeah, this is very much like a trading range, right? As soon as you get here, this is trading range price action. Now, what's interesting is we have formed our breakout here. Then we form our channel here. What comes next? Trading range, right? So you anticipate one of these pullbacks down in here to create a new swing high. But it failed. Grab the path again. So you anticipate something like this to form. And potentially put in a swing high. However, that never happened, right? Instead, we went sideways. So automatically, I'm thinking trading range. And that's exactly what ended up happening here. Let me draw our fib. This is a very tight trading range. This condition is not very favorable to take trades, in my opinion. I would be waiting. I would be on the sidelines during this period. So let's say we drew our fib like this. And then we get this bear candle here, and price attempts to break lower. It failed, right? It did not go lower. Well, it did form a new low, but it did not break out below it. So I would still consider this part of the trading range. The trading range has now evolved to this. I want to see a strong closure below that swing low. The fact that it got bought right back up is not very convincing to me. And so now here's our trading range. This entire range is a trading range. Yeah. Until we get what? Until we get lower lows and lower highs, which we have here. Now it's clear that the trend has reversed and we are in a channel. So it's tricky because you can argue that this candle here is the breakout. I know I just said I like to see a strong bear breakout, but really all it has to do is put in a swing low. The reason why I say I'd like to see a strong breakout, because that means that there's conviction to reverse the trend. Oftentimes it will trade below the range and wick right back in, and the trading range continues. However, it did put in a new low. So when you go back and you draw your trend lines, you see, this was the start of the bear trend. However, it could have still kept you chopped up in a trading range during the period where it did trade below the swing low. So this is a breakout, but it's not a very convincing one, right? So we do have trading range, breakout, channel. Now this is very obvious what the strategy would be here when you see lower lows and lower highs. At this point, when you see the market break through the lows, you're anticipating a pullback. Now, this big bull breakout here, I wouldn't be looking to short that after you see these big bull candles. I would probably be on the sidelines till maybe perhaps the trend is more defined. As you can see at this point, once we reach this swing high here and trade lower, at this point you have a bear trend line. And is it reasonable to take a trade down here? Some traders may argue yes. Some may say, well, this is a tight bear trend. You don't want to go long in a tight bear trend. Some traders will say that, well, I would say if it's not obvious, right? If you can't tell if it's a broad channel or a tight channel, just assume it's a tight channel. So in my perspective, this is a little too tight for my tradability, if you so to say. Now, when the price trades back up to this upper trend line, it's very clear that you have a short opportunity to trade. And if you would have scaled to a lower time frame, like a 1 minute, and you caught the reversal bar, you would have had a very nice trade. Perhaps you take profits at the trend line, partials, and perhaps you wait to see what happens there. In this case, if you waited to see what happened, you would have got a breakout. Right, so where's our first pullback? Our first pullback is right here on this one. So that would begin the channel phase, but it's quickly met with another bear breakout. So if you really wanted to get in there, it's a very, very tight bear channel. Very, very tight bear channel. It's not very sure. Let's keep it like that. Here's the first pullback. So breakout, tight channel, and then once we get a break above the channel, I'm automatically thinking trading range. Until what? Until we see higher highs and higher lows. And in this case, and this is also a breakout too, right? So you have a breakout. What's going to happen next? A trend, a new trend, or a trading range? Well, there's not enough information here to tell yet. Until you get either higher highs or higher lows or sideways price action. And as you can see here, we're starting to form higher highs and higher lows. So now this is a channel, right? And up to about right here, the channel is very obvious as to it's very obvious as that it is a tight bull channel. So if you caught this pullback right here and caught this trade aiming for a swing high, that trade would have won. Even this one right here, you would have caught near these lows, exited up here. Wouldn't have gotten so lucky up here, but at the same time, we break through that channel. So what are you assuming? Trading range or bear trend? In this case, you got a trading range, right? You got, and this is how you know you're in a trading range. Lower highs, higher lows. Triangle, pretty much, right? In this case. But if you look at a 1 minute chart, this is just a trading range. What happens after a trading range? You get a breakout, right? And that's exactly what we got here. So imagine you see this big bull candle and you say, you know what, I'm going to go long here. That's fine. A perfectly good trade. You set your stop loss at the low and you go 1-to-1. Very high probability trade. You win that one. Okay. Now going back to the breakout, right? What's the cycle? Trading range, breakout, channel, right? Channel. Higher highs, higher lows. What's after a channel? Well, you get a break below this trend line, you get trading range, right? Lower highs, higher lows. Same pattern as you got right here. Channel, trading range, breakout. Channel, trading range, breakout. Now, let's say we buy this breakout above that candle. You get another 1-to-1. Oops. As you can see, get another 1-to-1. So you get breakout. And then where's our pullback? Right here. Then you get channel. It's very brief, right? But if you go to a lower time frame, you will see that there is higher highs and higher lows. Until you get a break of the channel, then what's next? Trading range. This is exactly what we got here. Trading range. And then we get a bear breakout. And this was a failed bear breakout. This is pretty ugly because you're looking for a new trend to begin. However, if you scroll back to a different time frame, a higher time frame, all you're going to see is that this is just one big trading range, right? And look, trading is not necessarily simple all the time. You're going to take your losses, and that's the chance you have to take when you believe that you're trading within the right context. So it's reasonable to look at this time frame. Like if you're only looking at a 5 minute, it's reasonable to see that bear candle, bear breakout, and think we're going lower. At the same time, though, is this a very convincing bear candle? Not very much, because you can imagine that the bears tried to get that breakout. They wanted to start a bear trend. But when you see that the buyers aggressively buy it right back up, perhaps maybe you don't enter on that candle. You want to see maybe another candle. Is there another bear candle that closes near its low very aggressively? In this case, no, you got a very strong bull candle. Once I see that, then I know, okay, the trading range now is like this. Until you get this big bull breakout, this is more convincing, right? This looks more like, okay, maybe you buy the high here, set your stop loss at the low of the breakout, and you go for a 1-to-1, and you would have got that one. In this case, it was a little more sketchy of a trade. When you see the breakout failed on the next candle, you're starting to think of ways to maybe manage your risk here, because you see this and you're like, another failed breakout, and it's a trading range, right? And maybe you get out early on that one. So really the trading range is all of this price action here. It started small and then it started to widen as you got these failed breakouts. But no problem, right? because we get another breakout here and say we buy this candle. We can put our stop loss at the low of that candle. I don't know if we get a 1-to-1 here. Now there's ways you can manage this, right? Perhaps we don't. Nope, doesn't look like it. So there's ways you can manage this, right? Remember, you bought because it's a breakout, right? So you want to see the breakout continue, perhaps a channel form and trend higher. You're thinking that this is the top. Sorry, not the top. You're thinking that this is the start of a bull trend. The reason why I said top is because you had very many consecutive bull breakouts. At some point, you got to start thinking, when does this end? Right? And if you're thinking, okay, maybe I bought the top, and you see this form, what do you see? You see a trading range form. Right? Now I'm starting to think, well, this isn't a bull trend like I anticipated. This is a trading range. And now what should I consider doing? You could exit once you see it's forming this range. Well, now you trade it like a trading range. You see, okay, well, price is pulling back, right? You would be long here and you see prices pulling back, no big deal. Price tries to make another swing high. Now you're thinking, uh-oh, perhaps it's a trading range forming. Price comes back down to the support there. Get rid of this. Price comes back down to the support there. Well, what do you do at support? Do you sell at support? No, you don't sell at support. You buy at support. But we're already in a trade, so if you wanted to scale in again, you would have to test that out and let me know how that goes. But what you're doing would be increasing your risk. However, we have context here. So now we are anticipating a trading range forming. You don't want to sell at the bottom of a trading range. You'd rather sell at resistance of a trading range, right? If you're long. So in fact, buying here at this candle would have been a profitable trade once you recognize that we're in a trading range now. Now you're looking to sell your position at resistance. Now we get another breakout. And if you're thinking, man, I didn't get max profit on my last trade on this breakout, what makes you think you're going to get more profit on the next one? All right. You might be looking for reasons to sit out the breakout because eventually it's like musical chairs. Eventually the party's going to come to an end. The fun's going to come to an end. And when I see this and it puts this candle up here and wicks right back down, I'm looking at this entire thing as a trading range now. And so once you start to see, what's real interesting is you have the buyers. They did try to buy right here. They did try to buy this lower third, anticipating a trading range. Immediately, the bears aggressively got a breakout below that low. I'm automatically thinking short, right? So I'm thinking this is the start of a bear trend. Perhaps you enter there and get, boy, that was an ugly one. Did they stop us out on that one? Maybe so. But again, you could also do the same thing. I would have even trailed my stop too. So once you entered right here and you get this bear breakout again, right? Because you get breakout. Get rid of this real quick. Follow me real quick because you're going to see how you could avoid a loss in this situation. You get a breakout, then what's after a breakout? Channel. All right. Then you get a bull breakout right here. So again, let's pull this one up again. Say we entered at the close of that candle and we're trying to get a 1-to-1 here. We didn't quite get the 1-to-1 yet, right? but we see that there is a channel forming. Breakout, channel. Then we get a breakout out of the channel. That tells us one of two things. Now we're either in a trading range or a bull trend. We're no longer trending down. So once you see this break, it's very reasonable to exit, because you're looking at this and saying the fun's over, the downside is done. We're no longer trending down. We're now either going sideways or about to go up. And how much are you willing to risk to find out whether it's a bull trend? Now, you could have trailed your stop once you got a break. Say you entered there and you got a bull breakout right here, or sorry, bear breakout right here. This one. Get rid of this now. You get another swing low. I would have trailed my stop right up to there and followed this channel line until you get a breakout. Now, do you really want to take the gamble to say maybe this is, and this is even a slight bull trend, slight channel? I'm looking to get out right above this candle, right? Because maybe perhaps we get a small trading range and then a push lower. I may risk to see if that happens. But after I see this bull candle here, think about it. We attempted to put a swing low in, failed. I'm going to exit right above that candle. And then we ended up getting a trading range. So channel, trading range. Then we get bull breakout. Okay, bull breakout. Let's go long. And you would have got 1-to-1 on that one. So again, it constantly goes in cycles. This is crazy because this is just a straight up reversal. If you go to a low enough time frame, you'll see a slight channel consolidation bear breakout. Like I said, if you go to a low enough time frame, the cycle always remains true. This is why I always shift through different time frames to look for what part of the cycle we're in. The top-down analysis, multi-time frame analysis, whatever you want to call it, I'll have to cover that another time. What I'm trying to show here is how the market moves through cycles and how to trade through them, how to anticipate them, how to see them before they develop, because that's very important. Oftentimes, when the pattern is very obvious, when the market is very obvious that it is sideways, the chances are that's going to be the end of it. And same with trends. By the time you notice that it's a trend, chances are the fun's over. Chances are it's going to flip or it's going to go sideways. So it's good to catch it before it happens, right? Just like right here, you get a bull breakout, right? You're thinking one of two things. Maybe it's a bull trend. Maybe it's a trading range. You got to be willing to be prepared for both. Because if you catch it early, then you'll make lots of profitable trades. You also want to pair it up with higher time frames. Again, I'll go over that in another video. Maybe that'll be part 3. But you'll see exactly how to plan a trade given the context that you're in, given the cycle that you're in. I don't ever trade the 5-minute cycles. I only trade, and I day trade, right? I trade the 1-hour cycles, and then I scale to a 5-minute and basically use the 5-minute as an entry. I'm still looking at the cycles because that the cycle is always true no matter what the time frame is. However, when I'm trading the 1-hour cycle, and then I'm scaling to a 5-minute to look for a breakout, to look for a bull trend, right? If 1 hour is in a channel, right? If it's in a one, let's just see. Let's find something real quick. That way I'm not just yapping. You can see what I'm talking about. Okay, look at here. And this is right after to all of that price action we just looked at. But here you see an obvious tight bear channel. So what I do is I'll look at the 1 hour and say, okay, we're in a bear channel right now. Tight bear channel. I do not want to take any longs. Not even on a lower time frame. I'm only looking to short this price action. Right? So let's say we catch it in the middle here on this candle. Of course, this is sort of cherry pick, so forgive me, but this is how I would go about trading on a day-to-day basis. I'm just marking that level there so I don't get lost. Where are we? We were just there a second ago. So on the 1 hour, we obviously know that we are in this channel here. We're in this bear channel. And at this point, let's say we didn't know what was going to happen next. Up until this point, you can obviously that we had lower highs and lower lows. As price trades back up to this channel trend line, what do we have here? We have a bull breakout, which is anticipated, right? It's anticipated we're going to trade up to this trend line. Then we have a channel. Where are my trend lines? Then we have a channel forming. So we have breakout, channel. Then we have breakout again. Now this is a very strong breakout, right? So what's the context here? Perhaps, let's say this candle printed and then another, let me just do one of these so it'll be very easy to visualize. And perhaps you get some sort of context of what a live trade would look like. So where are we right now, right? Let's refer back to this. Right now we're in the breakout, right? Here we're in the breakout. We're in the breakout phase. After we are in the breakout, what's next? Channel. We get channel here. Now what's next? Trading range, right? And we get that big bear breakout below that channel trend line. Now think about if the next candle was a big old bullish bull candle and it traded all the way back up to here. Well, now you can safely assume that this is a trading range, right? And then price will break out again, whichever way, we don't know. But when you see this bear candle, you know that we're no longer in this channel. We're no longer trending up. We get this breakout. So as a trader, right, you always have to consider the risks. When you see this bear breakout, what is the chance that we start forming a trading range here at the top of a trend line? And you see a big bear candle? I'd say it's more likely that this is the start of a bear trend rather than a start of a trading range, right? But we don't know that yet until we have lower highs and lower lows. But like I said, sometimes you have to catch it early and you have to use your skill to be able to read what's happening. You have to be able to read what's going on. I would say right there is a pretty reasonable entry. Get on 1-to-1, why not, right? And obviously we know that this trade was a winner. Okay, I can't get rid of that one right now. There we go. So when price trades below that candle, we'll enter our position. Okay, we would have entered short there. At this point, you're loving this trade, right? And at this point, it's pretty safe to say that this is a bear breakout. What's next after a breakout? A channel, right? So there's our pullback. At this point, what are you thinking? You don't love this candle, but at the same time, is this candle very convincing? This bull candle here? Why does it always pop up? I'm trying to show the candle. This bull bar right there, where my crosshair is. When you see that big old wick at the top, it's not very convincing, right? You're looking at that and saying, does this look like the bulls are attempting to push it higher? Well, they tried and it got bought right back down. So up until this point, I'm thinking that this is just a pullback. And you see that candle and you see that the bulls obviously failed to drive it higher. Now we're going to ask, are the bears going to hold that resistance? And yeah, they did. They got below support there. Now we're forming some sort of trading range. Oh, this was ugly right here. Right? At this point, I'm starting to think, are we going to form a support here? But as you can see, now we're forming a channel. So now you're feeling real good about this trade because you're forming lower highs, lower lows. And the start of the bear trend was right here. Breakout, pullback, start of the channel, right? And now you get your TP. And price goes back to the trend line again. So that's how that would look in real time. And throughout the trade, you really had no reason to stress about it. And you would have actually trailed your stop up to here once you got a trade below this low. Trail your stop. Now your risk is very limited. You have very small risk and you have everything to gain, right? Again, I said in the first video that this topic is very complex. It often takes a lot of time to develop the skill, and then on top of that, it takes execution. You have to go in and don't be afraid to execute. Don't be afraid to take the trades when you see these things happen. One of these days, I'm gonna go into my trading framework, which I have on my desktop here, and I use all of this every single day when I look to make my decisions, my trades. I'm not going to go all over all of it right now. If you want to pause and kind of get familiar with this stuff, or maybe just get a glance at what future lessons may look like, I'll just go through it real briefly. I start on the daily, right? I'm a day trader, and so I look at the daily chart and I'm considering what I taught in the first lesson, the first and second lesson, what type of day is most likely to happen. And you use your analysis of the candlesticks and how aggressive the bulls and bears are to determine what do you think the price will do today. Then step 2, I go to the 1 hour and do exactly what I showed you here on the 1 hour. I identify what part of the cycle we're in. Right here, it's very obvious that we are in a bear trend. We're in a bear channel. Lower highs, lower lows. So you would want to trade that accordingly. Then from there, I scale to a 5-minute, and I essentially do the same thing. I look for what part of the cycle is the 5-minute on, and I want to be aligned with the 1 hour. So if the 1 hour is in a bear trend, like this, a bear channel, I want to see a bear breakout or even a bear channel form. It's very high advantage if you can pair up a higher time frame with a lower time frame. And like I said, I have to go through all of this another day. It gets very rigorous, right? It gets very detailed as we go, because when it comes to executing a strategy, you don't want to miss any steps. If you miss a step, then you're failing to reach the full potential of the strategy. So I keep a framework that's very detailed to always keep me aligned with what's going on. And then I know that if I fail to execute any of these steps, that is a trading error. That's a mental lapse, and it didn't have anything to do with my strategy. It had to do with my execution. And those are two different losses, right? When you take a trade based on your own mistake, it feels a lot more painful because you know that it could have been avoided, compared to if you took a loss following all of your rules. It's not as bad because you know that you took a loss due to variance. I have lots of content coming down the line to teach you about all these things, about statistics and how they apply in the markets, more on price action as we go. But I'll wrap it up on this one. So until then, I'll see you guys on the next one.